Good morning. You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos, and here are the biggest stories to kickstart this trading day Tuesday. FDI inflow slumped to a 10-month low in March as the war in Ukraine darkened the outlook for investments.
Now, PEZA urges the government to continue giving tax breaks to investors following the decision of one BPO company to let go of incentives in order to continue its work-from-home setup.
With another round of oil price hikes taking effect today, operators of jeepneys and provincial buses are pushing for a fare hike.
And the peso sinks below 53 against the dollar to fall to a fresh 3-year low. Now, over at the PSE, all counters ended in the red on Monday's trade. We begin our broadcast with net foreign direct investments falling to a 10-month low in the month of March.
Now, this as Russia's invasion of Ukraine dampened investor sentiment. Data from the Banco Central show that FDI net inflows dropped by almost 10% to $727 million in March. That's from $806 million during the same month in 2021. Month-on-month, net FDIs fell by more than 18%. The March 2022 figure was the lowest FDI inflow recorded since May 2021. The Banco Central said that while the country's macroeconomic fundamentals remain sound, external factors including the impact of the war in Ukraine and the policy tightening of major central banks may have contributed to lower FDIs. For the first quarter of 2022, total FDIs rose by 2% to $2.4 billion. Now, PEZA says the government should continue offering globally competitive fiscal and non-fiscal incentives to attract more foreign investments. That's in order to boost the economy. PEZA Director General Charito Plaza says incentives like the ease of doing business and the lower cost of doing business, especially in our economic zones. Plaza's comments came after the Finance Department issued a statement on the decision of BPO firm Concentrix to give up its tax perks in exchange for a continued hybrid work setup.
Now, Finance Assistant Secretary Juvie Danofrata, who also heads the Fiscal Incentives Review Board Secretariat, said that the company's decision shows that these incentives are, quote, not that important to investors doing business in the Philippines. She added that the move of Concentrix also validates the Finance Department's policy thrust to avoid granting what it calls unnecessary perks that cut on government revenues. But Plaza says the FIRB stance is, quote, sending the wrong signals that the government is only after taxes.
Where does the BPO sector stand now that Concentrix has decided to forego its tax perks just so they can extend full work-from-home arrangements? Just how valuable are these incentives? Let's get insights from industry leader Jack Madrid, President and CEO of the IT and Business Process Association of the Philippines, or IBPAP. Good morning, Jack. Thank you for joining us.
Good morning, Jess and Daniel. Good to be here.
Again, are there other BPO firms here? I mean, let's be direct here. Are there other BPO firms that's going to follow suit after what Concentric decided to let go of tax perks just so they can extend their work-from-home arrangement?
You know, I empathize with the difficulty of investors in our country, listening to the voice of the BPO employee. During the pandemic, as we all know, a vast majority of our workforce had to relocate and work from home due to the lockdowns, and the return to normalcy and to on-site operations will be equally challenging. But to answer your question, I highly doubt that investors in our industry and in other industries, for that matter, will forgo tax incentives. And in fact, in the case of Concentrix, who is a very active member of the association, this is, I believe, a very temporary measure and a painful decision for them to make, given that viable commercial activity and profitability needs both fiscal and non-fiscal incentives. There is a war for talent going on in the global IT BPM industry, and one of the industries where our country is actually a world leader. and sacrificing tax incentives is a, I would say, is a disincentive to growing investment in our country and our industry. And I know that this is just an interim measure of a company like Concentrix, based on the fact that they had to listen to the voice of the employee. They had to do right by their staff in this eventual, return to a more hybrid work setup.
Okay, Jack, while you're pointing out, of course, that this move by Concentrix is primarily based on employee management here, still, it puts into question the value of these tax incentives that's being offered by PEZA and FIRB. Even the FIRB has commented, that it's really not important to investors doing business in the Philippines. Your thoughts on that, and what do these tax perks really mean to BPOs?
I think any investor, especially in our very large and important industry, consider an array of factors before investing into our country. Both, I would say fiscal incentives and tax incentives are critical to continue to grow our industry. And I think knowing the investment appetite of many of our members, including Concentrix, I believe that fiscal incentives will continue to play an important role to grow investors and to retain investors in our industry in the Philippines.
Okay, sir, when you mentioned this would be temporary, do you mean by that it's just a matter of time before the BPO industry can comply with the on-site work? As I recall, we also had you and we had CCAP before saying, we want to comply. It's just that right now it's still very difficult. We still need this hybrid work format. Or do you mean by temporary that this suspension of incentives might actually, be reversed, and that they might be listening to the sector in terms of still giving it despite the hybrid format?
Concentrix and other investors, who are considering options right now, are in a very critical juncture, because there is large demand for Filipino talent, especially in our industry, and attrition is a key challenge as we return to some kind of normalcy. And so, as I said, it was a painful decision to temporarily forgo their tax incentives, but I highly doubt that they have surrendered incentives on a permanent basis. I think they just heeded the call of their employees, because it is extremely challenging to just, after working from home for almost 2 years, to just suddenly fully return to on-site. And we see this beyond our industry. I think we all have seen the benefits of a hybrid work setup that we are all still trying to figure out what that optimal balance is. So, I think again, the Filipino employee and workforce is critical to the long-term success of our industry, and we need to continue to, manage the vast demand for talent in our country. And one of these, and that's what we're facing right now. So I think an investor's decision will include both fiscal and non-fiscal incentives. And I think employee retention is critical to our long-term success. We have to remember that we are the biggest job creator for our economy. We ended last year with 1.44 million employees, one of the very few industries to grow. We added 143,000 new jobs during the pandemic. I can't think of any other industry that can claim that. And I really would like to stress that we need to continue to offer all investors, as DG Plaza of PEZA said, consistent application of regulations, and not having this image of changing rules in the middle of the game. We are in a war for talent, and I think we should remember that the IT BPM industry is an indispensable pillar of the economy.
Do we take it to mean, Jack, that you feel like Concentrix eventually will actually revert back to asking its employees to go back on site for work? And does that mean as well that you feel like demand for work from home arrangements from employees will eventually taper off or wane in the future?
There will be a return to some kind of normalcy. I think there is no magic number for anyone. There's no one size fits all here. After all, the IT BPM industry has become more complex. We serve different customers, industries from all the different time zones. And so we are currently allowed those members of PEZA, registered enterprises who applied for a letter of authority, are currently allowed, according to PEZA law, a 70-30 ratio of work from home, 30 being those allowed to work from home. So going back to Concentrix and other investors, I think none of them, I expect, will forego tax incentives. It is a very important factor for continued investment in the country.
Sir, tax benefits aside, is the productivity of employees in this hybrid setup and work from home higher than just being on site, and is the profitability better because of it?
That's a great question, Danny. I'm proud to say that over the pandemic and the speed that which we were able to adapt and mobilize transfer of personnel to work from home arrangements yielded improvements in productivity and maintained customer satisfaction ratings across all the global services we delivered.
Okay, good to know, sir.
No, go ahead. No, earlier you were mentioning about the 30% work from home arrangement through a letter of authority. That's going to expire by September this year. What's the game plan now for the sector? Are you still pushing for that hybrid work mode to continue? Are you in contact with any of the officials of the incoming administration regarding that law?
That's another good question, Jess. I think hybrid is here to stay because I believe that the future of work is allowing employees flexibility in being able to best deliver their services. We are in dialogue with both the current and incoming administration on the importance of flexibility in the workplace. We do have 1.44 million Filipino employees in the industry. We have listened to their voices, and it is clear that an overwhelming majority of them prefer a hybrid work arrangement. We don't know what that final number will be, but we are quite comfortable with the current 70-30 ratio that the PEZA has allowed us to those who applied for that letter of authority.
Okay, and finally, sir, before we let you go, can you give us an update on your growth targets this year? Last year, 10.6% growth. Despite this work from home and hybrid setup, what are you hoping to achieve this year? And is there a return to pre-pandemic levels of profitability already?
Well, we grew impressively even during the pandemic, as I mentioned earlier, and the early indications are that 2022 will be equally as good as 2021. Global growth of the industry was almost at a historical high in 2021. Wow. And although we grew 9.1%, it is important to mention that we had a bit of a missed opportunity there because it's one of the first times that the Philippines did not quite track global growth. So I think, again, we need to emphasize the ease of doing business to attract and retain investors. But we are bullish about the future prospects of the industry in the 6 years ahead. And the IBPAP is working on our Roadmap 2028, which will serve as the industry and the country's blueprint for our industry's growth and future success in the next 6 years.
All right. Thank you so much for that update. That was, of course, Jack Madrid, the President and CEO of the ITPAP. And another round of oil price hikes takes effect today.
And with the continued rise of pump prices, even bus operators are now clamoring for a fare hike. Gerard de la Peña reports.
Jeepney drivers are now thinking twice about going on trips as oil prices continue to soar.
Sasayang lang din ng sabi ng may-ari pagka hindi kumita. Wala tayong magagawa.
It's the same case at the Parañaque Integrated Terminal Exchange. Some modern and traditional jeepneys opted not to go on trips. That's why the PTEX management is planning to ask the LTFRB for help.
Ramdam natin na naapektuhan na sila, much to the detriment ng ating mga pasahero. Kaya naman pinag-aaralan natin mabuti kung paano i-augment to.
High toll fees and fuel prices have also prompted provincial bus operators to ask the LTFRB for a 30 centavo per kilometer fare hike. They said they will file the petition within the week. The last time these buses hiked fares was in 2018. However, it doesn't stop there. Diesel prices go up by 4 pesos and 30 centavos per liter, gasoline by 2 pesos and 15 centavos, and kerosene by 4 pesos and 85 centavos. The Energy Department cites the ban on Russian oil imports and the ongoing Russia-Ukraine war for the continuing round of oil price hikes. But the DOE says pump prices are unlikely to reach the 100 peso per liter mark anytime soon. This as oil exporting countries have committed to increase production next month. The lockdown in Shanghai, China is also expected to curb demand next week. For News 5, Gerard De La Peña, we are One News.
Still on soaring pump prices, a transport group is pushing for an increase in jeepney minimum fare to up to 14 pesos. On One Page's Sa Totoo Lang, Manibela President Mar Valbuena noted that the current 9 peso minimum fare has been in place since 2018 when the price of diesel was 36 pesos. Diesel prices have since increased by around threefold as of this month. Valbuena says they proposed for a 5 peso fare hike back in January, but the hearing for this has only been scheduled for June 28. The group is now urging the government to establish a sense of urgency in addressing the matter as both drivers and commuters are bearing the brunt of oil price hikes.
Humihingi kami ng increase January, February pa. Ano na pong panahon ngayon? Pababa na po ng Malacanang yung ating Pangulo. Ay hindi pa po ito nadadagdagan. Sa ating pong mga mananakay, talaga pong kami nagsusumamo na kung kulang po yung ating masasakyan, humihingi po kami ng pangunawa. Dahil po sa ngayon, hindi po talaga kakayanin.
Now, the health department says the alert level in the metro will be escalated only if hospital utilization rates increase further.
But experts warn NCR can log up to 7,000 cases per day if the low booster turnout continues. Camille Samonte with the report.
The Department of Health has clarified that there is no basis yet for Metro Manila to be placed under Alert Level 2 despite the slight uptick in COVID-19 cases in the country. Health Undersecretary Maria Rosario Vergeres said escalating the alert level would depend if cases and healthcare utilization show significant increases.
Now that we are seeing that the number of cases have increased in other areas of the country, we are now closely monitoring our hospital use. If this increases and this goes up to that moderate level of consumption or utilization in the hospitals, and then we will need to escalate areas which will have this kind of classification.
Vergeres noted that the increase in cases could be attributed to the waning vaccine immunity and the increased public mobility. Vergeres said 7,000 cases per day in NCR is projected by August if the low booster vaccination turnout continues.
If, of course, minimum public health standards will be reduced, the compliance to this, and the waning immunity that is being observed because of this low booster uptake, they are projecting that by the start of August of this year, there would be increase in the number of hospitalizations, and we are looking at around 7,000 cases per day in the National Capital Region.
DOH earlier reported that 14 out of the 17 cities and municipalities in the National Capital Region saw more COVID-19 cases last week. The region, however, remains in a low-risk classification. Quezon City is one of the LGUs that reported a slight increase in COVID cases. The LGU raised its COVID-19 warning to yellow alert after recording an average of 28 cases per day this week. A total of 1,682 additional cases were logged from June 6 to 12. This represents a 30.4% increase from a week before. For its part, vaccine expert panel member Dr. Ronjin Salante said raising alert levels will help to mitigate the critical COVID situation in the region.
If there is an indication that we have to enhance or increase the alert level to moderate so that everyone will be also conscious about the status, especially the people na talagang medyo tumaas ang kaso, then we should do that.
For News 5, Camille Samonte, We Are One News.
Pausing for a quick break, but coming right up after that. We'll check how our local bourse is performing this morning after it fell below 6,500 on yesterday's trade.
More of that and other stories when Businessworld Live returns. Stay with us.
And we're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, Dan, it was all around pain and bloodshed globally on Monday. Has the bleeding let up at all?
Not at all, just the bleeding does not stop. Take a look at how our sectors are performing here. Our composite down by 0.9%, 64.08. Dangerously treading that 6,400 levels, might be breaking below that even. Services dragging down the bourse by 1.7%. Even mining and oil properties, just everyone feeling even more pain. Now, of course, you know, the pain of yesterday came on the back of the back-to-back inflation print. Last week, we had the one in the Philippines, and then on Monday, we had to digest the one of the U.S. And what is really going on here? apart from the fact that in the US it's of course a 40-year high, Papa Security says that the repercussion is that it might not have peaked yet and more aggressive tightening might be in play. In fact, traders are now seeing a possibility of a 75 basis point hike over in the US tomorrow. They also anticipate the overnight rate peaking at 4% by the middle of 2023. In fact, we're not the only one, obviously, and you can see that bloodshed over in Wall Street. Take a look at Nasdaq, down by 4 7/10%. S&P 500 has been down by 9% already in just the past 3 days. And again, Asia Pacific also really in the red. In fact, the MSCI was down by 2 7/10% yesterday. So what is going on here as the Fed is likely to increase and be more aggressive on rate hikes? There is, of course, an exodus from emerging markets and even from speculative investments like Bitcoin, which has suffered in this risk asset sell-off. Now, let's take a look at some of our movers this morning. If anyone at all is, even surviving here, just 3 in the green. That's LTG, Metro Pacific, and BDO. But everyone else, as you can see, being dragged down. Mondenisin in particular, which is, of course, very inflation sensitive as a consumer stock, one of the worst performers today. And, more bad news, I have to say, well, a little bit of good news here, is that the peso has weakened beyond the 53 levels. This is yesterday we had hit a fresh 3-year low already. The last time that we traded at this level was way back in October of 2018. Now, this, of course, on the back of outflows that we've been seeing. And just a quick peek on the world currency ranking year to date. Where are we even? We are 4th here on the rung, so not necessarily the worst performing. Actually, we're still at least in the top 5, if you can call it that. But take a look at all of the Asian currencies, or Southeast Asian basket at least. Everyone has weakened year to date, Jess.
Here are the headlines from the corporate front. Land Bank has launched 1 billion peso lending program to digitalize the operations of rural banks. The state-run bank hopes that this move would help reach more unbanked Filipinos in the countryside. Land Bank will finance digitalization projects of rural banks, including paying for subscription or licensing fees for commercial software or outsourced information systems. Land Bank can also finance the purchase of computer equipment and the purchasing or development of software, including maintenance and support.
The Basis Conversion and Development Authority, or BCDA, has remitted 7.38 billion pesos to the Treasury Bureau. That is an almost 61% jump from last year. The government-owned corporation says almost 99%, or over 6 billion pesos of the total amount, represents proceeds from sales, leases, and joint venture developments covering property and former military bases in Metro Manila.
Now, corporate big guns from San Miguel Corporation and Metro Pacific Investments held a historic closed-door meeting yesterday. San Miguel's head honcho Ramon Ang and Metro Pacific President and Chairman Manny V. Pangilinan met to discuss various topics, including sports and business. Also present during the historic meeting were SMC Sports Director Al Francis Chua, President and CEO of PLDT and Smart Communications Al Panlilio, and former Philippine Olympic Committee President and current PBA Chairman Ricky Vargas. And that's a first look into the business day this Tuesday, June 14, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.